All right, let's get right into it. If you've been on YouTube or TikTok or pretty much anywhere online lately, you have definitely seen it, the $100 a week investing challenge. It is absolutely everywhere. You've got creators tracking their portfolios, showing off their gains, and making some pretty big promises about how you can build wealth with just a little bit of money. But it all boils down to one massive question, right? The one we're all thinking. Can this simple habit, just putting away $100 every single week, really lead to that kind of life-changing money? Can it actually make you a millionaire? Well, that is exactly what we are going to unpack right now. So here's how we'll break it down. We'll start with the phenomenon itself, then dig into the appeal and why it's so popular. After that, we'll look at the engine that drives the growth, a simple strategy anyone can use, and finally, we'll visualize the goal that gets everyone so excited. Okay, let's start with the basics. What is this whole $100 a week challenge anyway? Let's deconstruct this online phenomenon. At its heart, it's actually super simple. It's a system built for beginners, people who want to start investing but are maybe a little intimidated. The whole point is to take the fear out of it by boiling it down to one easy, repeatable action. Invest a small amount consistently every week. That's it. Okay, but here's the thing. The secret sauce here isn't just about the numbers. It's about psychology. Why does this challenge actually work so well for so many people? Why does it stick? It really boils down to three key things. First, the number, $100. That feels doable. It's not some crazy intimidating figure. Second, doing it weekly. That builds a habit. It becomes automatic, like brushing your teeth. And finally, just calling it a challenge. That's brilliant. It gamifies it. It makes it feel like a fun goal to hit, not some boring chore. All right, so you're putting the money in consistently. Great. But how does a small pile of cash turn into a big one? Well, this is where the real magic kicks in. Let's talk about the engine behind all this growth, the incredible power of compounding. Now, you've probably heard this term before, but it is so important. Compound interest is basically earning returns on your returns. It's interest on your interest. Put simply, it's when your money starts making its own money, and then that money starts making even more money. The classic example is a snowball rolling downhill, and for good reason. You invest your first $100. It earns a little something back. Then the next week, your new investment is added, and your earnings are calculated on that slightly bigger pile. That cycle just keeps repeating, and pretty soon, that little snowball of yours is getting bigger and rolling faster and faster. And this is where it gets crazy. Look at this chart. After 30 years of putting in $100 a week, your own money would be $156,000. Not bad, but with an 8% return, thanks to compounding, that could be almost $600,000. That's the difference. It shows you that time is your single biggest advantage in this game. Okay, so the theory makes perfect sense, but what about the practical side? This is the number one question people ask. Where does the money actually go each week? Let's get into a simple strategy for beginners. Yeah, you can't just stick it in a regular old savings account and expect these results, right? So what are most beginners doing when they take on this challenge? What's the popular move here? Well, if you dig through all the YouTube videos and guides about this challenge, one answer pops up again and again and again. And that's the ETF, which stands for Exchange Traded Fund. The easiest way to wrap your head around it is to think of it like buying a whole basket of groceries in one go. Instead of trying to pick the single best stock out of thousands, you're buying a pre-made basket that has a little bit of everything in it, all in one simple transaction. So why do so many people doing this challenge love ETFs? Well, it's for a few really good reasons. One, you get instant diversification. Your risk is spread out, so if one company tanks, your whole investment doesn't go with it. Two, they're usually really low cost. And three, they're just easy. You can buy and sell them just like a normal stock. So this all leads us back to the big one, the millionaire question. Can this simple, consistent strategy really work in the long run? Let's actually visualize that long-term goal. And when we say long haul, we mean it. We're not talking about a year or two. We're talking about making this a part of your life for decades. Because when you combine that consistency with that much time, the results can be just staggering. Okay, first, let's look at just the cash you put in. $100 a week for 35 years. That comes out to $182,000 of your own money. And hey, that alone is an incredible feat of savings. But that is not where the story ends. Because thanks to our old friend, compounding, and assuming an average return of around 10%, which is in line with historical stock market averages, that $182,000 could become over $1.4 million. Just look at that. The huge majority of that final number isn't even your money. It's the growth your money created all by itself. So let's circle all the way back to our first question. Can investing $100 a week make you a millionaire? The math says, absolutely, it's possible. The strategy itself is simple, as you've seen. The real challenge, it's not the how. It's the consistency. It's sticking with it year after year through the good times and the bad. So the final question really isn't if it can be done, but are you ready to start?